Hello, I'm David Cassidy with the weekly market summary for the week ending Friday the 30th of April. Well, it was an interesting week. Recent, robust economic data allowed Jay Powell, the Fed chair, the US central bank, to talk optimistically about the economic outlook, while at the same time effectively reminding the market of the famous mantra, "Don't fight the Fed," as he repeated it was far too early to consider tighter monetary policy. And it's easy to see why. The core PCE reading, the Fed's preferred inflation measure, again came in below its 2% target at 1.8%. Although we fully expect this inflation measure to rise above the 2% target in the coming months due to last year's distorted prices, these effects will quickly fade as they pass through rather than resulting in persistently high inflation. Additionally, while it was announced on Thursday, the 29th of April, that the US economy expanded by an impressive 6.4% during the first quarter, this dramatically contrasts with Friday's data release, which showed that the Eurozone's economy shrank by 0.6% over the same period. The US recovery has been helped by a number of fiscal stimulus package payments to US households over the past year, which has boosted the savings rate and consumer spending. As an aside, Visa, the card payment company, said that spending on debit cards had grown dramatically relative to credit card spending. And we find this particularly interesting as it suggests to us that US consumers are being cautious, which we see as a positive, and it is more likely to result in a long-lasting consumer recovery rather than a massive splurge which quickly fades. Now, unfortunately, despite last week's positive economic data readings and strong company results, as you can see from the accompanying table, equity markets ended the week pretty much flat after Robert Kaplan, the president of the Federal Reserve Bank of Dallas, contradicted Jay Powell by saying the Fed should start to tighten monetary policy. Well, this shouldn't have been a surprise to markets, as he has previously indicated via the Fed's dot plot that US interest rates should be increased. Additionally, the Fed has a dual mandate which includes employment as well as inflation, and there remains millions of Americans still out of work. And furthermore, he isn't even a voting member on the Fed's Monetary Policy Committee. Looking ahead, this coming week, we have Bank of England Monetary Policy meeting on Thursday, the 6th of May, Eurozone retail sales, US ISM, US factory orders, US employment data, non-farm payrolls, unemployment rate, participation rate and average earnings, as well as Chinese PMI and Chinese import and export data.